A very good evening. It's 8 o'clock Indian Standard Time, 8 p.m. on the 8th of October 2021, Friday evening. This hour, we are going to talk about the markets, sectoral movements, and then we'll talk about a few stock ideas. But first, as always, a quick look at the Nifty and how did the sectors play out this week. It was a difficult week. Let's first take a look at the weekly charts. Now, what we have is an inside bar on the weekly charts. This is not a bullish engulfing pattern because bullish engulfing pattern comes after a downfall. This is a rising market. This was a dark cloud cover. This stays as a dark cloud cover, and until and unless this bar's low, which is 17,433, is broken, we should not expect this dark cloud cover to kick in. So what we have this week is a 369.2% bounce back from last week's little bit of selling. The trend is strong. It holds well. It is holding itself pretty well. But we did experience a bit of tough days, volatile days, especially what we saw on the 5th and followed by the 6th, and what we saw yesterday, strong gains. Today it closed like a very small bodied spinning top. Yesterday was also small bodied with a little bit of higher shadows. The important thing is the fact that this was the day that we faced the sell-off. This was the day which showed that the Indian markets were relatively stronger, and it completely reversed on the upside, and on the 5th of October with, I think, 123 points gain. The next day was a disappointing day, a surprise sell-off, which closed very weak. And the next day, which was yesterday, was equally surprising because it opened really strong. The good thing of today's close is the fact that we have scaled above the red bar's high. That is, the 6th of October's high was 17,865. And with today's marginal gains, it's around 91 points. It could have been better, but overall, we have scaled above that bar's high. This is a good sign. For last two bars, it's a higher high, higher low on the daily time frame. So this is not a bad sign. This is a good sign, which re-establishes the strength of the underlying uptrend. A lot of us are probably looking at this prospective head and shoulder topish pattern. Maybe, maybe not. The left shoulder took around 7 days. So we are already 1, 2, 3, 4, 5 days onto the right shoulder. But let's not create patterns. The pattern traders or pattern trading is best once the pattern has taken a shape, confirmed, broken out, and then traded. But it's too early. The fact is, we have a strong market in our hands. A quick look at the 75-minute time frame, a smaller time frame, clearly shows that the index is unable to take out this resistance band. Yes, it opened really well today morning, but then rest of the day it essentially stayed range bound, which is okay. You're not giving up any grounds is better. But this kind of a resistance is kind of strong. It's 17,900. It's just scaled a little above that today. Straight 17,913. But overall, the trend stays. The short-term support for Monday, Tuesday's trade will be close to 17,840, 850, which is this high, this low kind of a zone. We can quickly take a look at the volume profile of how volumes had played out in this bounce back. So from this point onwards, if we take all the way up till the recent, then we can see, there you go, 17,820. So we just mentioned 17,850. So 800, 850 is the short-term support that we should look for. And below that, this is the previous highs, which can act as 17,720. So use 17,720, 17,800, 850 as short-term supports. Let's not talk about resistances, because on the upside, there is not much resistance. The market is very close to an all-time high. And in this kind of a market environment, it can scale up anywhere. Before we take a look at the sectoral performance, let's quickly take a look at how did the sectors play out on a week-on-week basis. We're here on the stockcharts.com website, and we have the NSE indices. Let's reduce this tail length to 1 week just to find out how did the sectors play out. IT leads the pack with 4.7%, followed by media, auto, mid cap, energy, small cap. Not bad. Pretty mixed tails. You can see leading sectors as well as lagging sectors, and a bit of improving sectors and a weakening sector. So this is a scenario which shows that gains have come in from across. Not only have the strong sectors performed, but the weak ones and the lagging ones have also performed. We spoke about auto, if you recall, I guess it was last week, that auto has now scope to gain momentum, relative strength momentum. And we did see that Tata Motors, Maruti, M&M, and a bit of two-wheelers also. But it's still in the lagging quadrant. According to the RRG rules, it's still in the lagging quadrant. Now let's take a look at a 12-month perspective. I'm sorry, 12-week perspective, and sort in terms of tails. So real estate and IT stays in the leading sector, and time and again they have proven that they are good counters to be bought on dips for both. Consumer durables from an improving quadrant is now in the leading quadrant. It has enough scope. It has a lot of headroom to gain in terms of relative strength, which means that it can show us some good gains here from here on. Then we have energy, exceptional move that we found today in Reliance, and financial services. This is a pretty good sign. We have financial services which have a decent weightage. Energy has some pretty heavy weights like Reliance Industries. The OMCs also matter. Then we have a defensive space, the consumption, the FMCG, and then IT and real estate risk on sector, and it's been performing really well. And IT also benefits from the movement of dollar. So if you take a look at how the tails are in terms of leading and improving, it's quite a nice mix. If one falls, the other is very likely to support. On the other hand, this is a little surprising. We can see the FMCG now going back to the lagging. If you remember, I've been telling you that these flows of the RRG graphs can keep on rotating, right? And from improving, marginally leading, it falls back to the lagging. That's primarily because of this move is primarily because of the fall that we've noticed in Hindustan Unilever. Media has been bouncing back, mid cap, commodity, bank Nifty is inching up in terms of momentum. So if we take a look at these sectors now, the charts from a, let's say, first a weekly perspective, then let's take a look at bank Nifty. It's holding really well. These are the channels through which the index is trading through. I think these channels are drawn from the daily perspective. Yes. So these are the daily channels. So it looks pretty well poised. This is not much of a problem. The trend is still holding well, and we can expect a retest of 38,400. So Bank Nifty is doing pretty decent. FMCG, this is primarily because of, if I open the FMCG stocks for you, you would see that it is primarily because of Hindustan Unilever. There you go. The stock is down from its recent high. The stock is down almost 8%, a little over 8%. That's quite a sharp fall for Hindustan Unilever. Not to forget that it also has gone through an exceptional rally. So it's kind of retracing that one. Going back to the sectors, banks are fine. Financial services are also poised pretty well. Metals, tricky. Definitely tricky. We can clearly see the resistances right up there, and few stocks have done pretty well. I think all eyes should be on Tata Steel. Very important juncture the stock is right now. Real estate cools off a little bit. Is this going to be a breakout failure? This is on the daily chart. So for the real estate sector, for real estate stocks, we should keep a close look at Wednesday's low. This is an important level. So if this low is broken within the next 2-3 days, then real estate stocks will definitely cool off. Private banks are doing all right. It's the ICICI Bank and Axis Bank which matters now. Pharmaceutical stocks, okay. This is turning out to be a failure. The movement that we saw on the 4th of October. So there are a couple of sectors which has given a move and then cooled off and are at important trend reversal junction. So like the movement, the nature of the movement that we have noticed, the thematic movement, buying across power stocks, buying across public sector enterprise stocks, buying across OMCs. This thematic movement will stay, is very likely to stay. The sectors might outperform, underperform, the sectors might go overweight, underweight, but this theme or theme based high momentum buying is likely to stay. Next one can be cements. If you see, most of the cement stocks have been in a strong uptrend, but they have been coming off a bit, and they have come down close to their August lows. This is the daily chart. That was Ambuja. This is ACC. It has actually broken below the late August lows and have created kind of a support close to this 2200 level. So we can see a bounce back. We can see Ultrachem back to its previous support. So this SPAC is in a very interesting juncture where one can expect a short-term bounce back from stocks like Ambuja, Shree Cement, ACC. So maybe not. Let's see. But it makes sense to maintain the bullish bias. Look to trade on the long side. I do not think going short would have benefited many traders in this kind of an environment, unless you're a short-term intraday trader. So maintain the bias on the long side. Switch on and off the cautiousness. At times we can be a little, careful and cautious, and at times we can, loosen up. At this juncture where we have closed and the strength that we have seen, I think definitely overall bias should stay on the upside. As we discuss markets today evening, Dow Jones is flat, finally a flat trade as of now, and SGX is also completely flat, down by just 9 or 10 points. So just consolidating right below an all-time high. So maintain that bullishness and keep a bullish approach in the market unless proven wrong price-wise. All right, that's for the markets. Let's now talk about stocks and investment ideas that we can look for in the week ahead.